bring in Warren Hogan now. He's economic advisor at Judo Bank for analysis on this inflation number. Warren, yesterday, what did you make of it? How do you read it?
Yeah, thanks for having me, Kieran. Look, it was a big number, and it's taken a few people by surprise in the financial markets. It's at odds with the RBA's view that they've been telling us about inflation for the last year or so. But I don't think it's a surprise to any Australians. They can see the cost of living is going up, and really it's been happening now for quite some time, for the last 6 months at least. There's obviously the big headline increases in things like petrol and housing costs and these sorts of things. But I think what we're really starting to see here is most things are going up in price. It's broad-based, and I think that's what people are really starting to pick up on. So, it was a big number. It's changed the narrative amongst the private sector economists. It only happened yesterday. The Reserve Bank's coming up for their first board meeting of the year next year. The governor's got a speech next week, and they've got their new forecast to update next week as well. So we're going to find out what their view is. But yeah, the inflation numbers have come through a lot faster than anyone expected, and we're looking a lot more like what's going on overseas.
I'll get to that rates question and the RBA in a moment. Just to pick up on something you said there about this being broad-based. Underlying this, you've got obviously the fuel prices. We all know that when we go to the Bowser, but there's supply chain issues, there's labour shortages. When you talk about broad-based, it really is when you look at the factors contributing to this.
Yeah, it is broad-based. It is a lot to do with the pandemic. So there's a lot of global supply chain pressures that are coming through that are finally showing up here in Australia. It's been happening overseas for some time. And it's very real. And it's also because the economy is doing well. People are out there spending, which is sort of, another way of looking at it is that strong fiscal stimulus that countries like Australia and the US and others that did. This is sort of the sting in the tail of that stimulus is that when you run a strong demand into a constrained economy, you're going to get inflation, and that's what we're getting. But in terms of, is it a problem? Apart from the cost of living, apart from what it does to everyday Australians and their, ability to pay their bills and so forth, from a sort of an ongoing inflationary point of view, it's a shock, and we've got to work our way through that shock, as all countries do. We don't have an inflation problem in Australia in the sense that it's going to start to run away from us. To get that, you need wages to be really starting to move. And of course, at the moment, the irony of all of this is that wages aren't moving. This inflation's coming through for other reasons. And that's actually what makes this very difficult for everyday Australians, is that this is, they're going backwards. Their standards of living are going backwards because what they're paying for things are going up faster than their wages.
Has the RBA, or will the RBA be mugged by reality here in terms of its forecasts on when rates will rise?
They are. And, we've been talking about this for months. It happened the last time the CPI came out 3 months ago. It's a problem we've got with the fact that we only put a CPI out every 3 months. We're the only G20 country that does CPI on a quarterly basis. Every other one, including countries that don't want their CPIs coming out because they're so high, like Argentina and Brazil at the moment, Turkey, but everyone else does it every month. So, there is this concept at the moment where when things are changing, we're not hearing about it quickly enough. And the RBA has been sideswiped by this. Just 3 months ago, they thought this number was going to be about 0.5, 0.6. The underlying inflation rate, the core number, when you strip out some of the volatile items, actually came in at 1. So they're up by 0.5%. So they have been mugged by reality. We're going to get their new views next week. A lot of market economists who were sort of running with their view and not thinking rates would go up till late 23, they've all shifted pretty aggressively in the last few days to rate hikes this year. Some are even calling it as early as May, I believe. I don't think the RBA is going to shift that much, but they have got a horrendous communications problem. They basically got the economy wrong. They've got their inflation forecast wrong, and I actually think their policy position's wrong. So they've got a lot of work to do.
In that context, Warren, how worried are you about the property market? Is that a concern to you, given the central bank has been saying, okay, low rates, record low rates for the foreseeable future? That's changing pretty rapidly. A lot of people leveraged big time in the property market.
Yeah. Yeah, well, look, I think if they start jacking up rates aggressively in the next few months, and they have to take them up from point one, so almost zero to say two, so that would take the mortgage rate from 2 to 4. If that had to happen quickly, then I'd be very worried about the property market. But I suspect what we're going to see next week, and I think the right thing for them to do is actually to be patient on interest rates, stop all their QE, stop all this forward guidance that they're going to keep rates where they are for 2 years. That's actually adding to the property sort of bubble, if you will, if you can describe it that way. They need to get rid of unconventional policies, be cautious with the rates, and only start to put them up later. Once we start to get wages moving, once we start to be convinced the economy's on an even keel, and I think that's a late 22 story. In the meantime, I actually think property is going to do exceptionally well. And there's two reasons. One, yes, rates are still low. And the other reason is that when inflation's rising and then the value of money is falling, it's going to give people an incentive to invest in property. So I think investors are going to be very strong this year. I think property is going to do very well. The ultimate outcome for property will be 23 or 24 and whether they have to jack rates up a lot. And that's all going to be about whether we have a genuine inflation problem. And I don't think we will. I think they'll have to put rates up a bit, but they'll do it cautiously. So I actually think it's going to be a very good year for property once again. But 23 and 24 are going to be the challenging years.
Warren, just finally, as we look ahead, we've got a big few months in terms of our discussions. We've got the budget coming up late March, then the election in May, either you would think it's got to be done by the 21st of May, so early to mid-May. What's your read on how that all plays into economic performance in this country? Do elections and their timing have a tangible impact on growth?
Look, there is some evidence, more from my experience and talking to other economists over the years, that SMEs, and I'm very focused on them at the moment and have been for a number of years, but businesses tend to put things on hold in the month or two ahead of an election, especially when it's looking like a tightly contested election, just to see what the outcome is. And I think that's the most likely outcome, is that we see a little bit of caution on the part of investment about on the part of business about committing to big investments. So I don't think this is going to be as much of a big issue as the last election, where the ALP in opposition had some pretty big policies. We know the strategy of the ALP this time. So I think it'll be quite a mild effect. I think the bounce out of Omicron, the fact that the economy has got such strong spending fundamentals, high savings rates, low rates, all of that thing will be far more important. So I don't think the election will slow things down. But that being said, I do think the economy is going to have a big impact on the election, and I think it's changing. I think this cost of living issue is big. The wages issue, the fact that it's lagging and not rising as quickly as inflation, is a big issue. And what Josh Frydenberg does with the budget, now that we know that the economy is effectively at risk of overheating, we're seeing it in the US. What's he going to do? Is he going to spend? Is he going to be, irresponsible? Some would say. So look, I think there's some critical months ahead for this country. And, there is that uncertainty because, how it all plays out is going to really have a big impact on how we go through 23 and into 24, I think.